Hi everyone, good morning and welcome to today's morning report on Thursday the 23rd of April with me, Rich Perry, market analyst at Handset Markets. The European trading session has got off to a fairly negative start, negative sentiment drifting through from the Asian session really. We had disappointing flash PMI data out from China and Japan, both of them missing estimates in terms of their reading and also back below 50, so it moving into contraction territory for both China and Japan on that PMI data. So that's not good. Certainly not good for the European stocks anyway. Fairly big weighting in terms of resources stocks that are exposed to China for the UK, and also exporters for Germany exposed to China as well. So hence why we're down quite strongly. DAX is down 1.3%. DAX being my chart of the day, so that is playing into my outlook on the DAX anyway. So I'll talk about that in a bit. But FTSE is also down 0.4%. Now, yesterday we had a fairly choppy move actually on the dollar. If I can find it. We had a fairly choppy move, and that sort of was driven by the sterling really. Sterling breaking strongly higher above the 150 big breakout level, and that came on the back of a slightly hawkish lean on the Bank of England meeting minutes that never really turned around, despite very strong data into the afternoon for the US existing home sales. But the dollar remained a little bit under pressure against sterling, but just dragged back the euro slightly, the euro sort of slightly lower. And today what we're seeing is some further weakness with this sentiment shift to the more negative following on from that Asian data this morning. So that's sort of helped to push the dollar index higher once again. Now, also overnight we've had news out from the RBNZ, Reserve Bank of New Zealand, which has had an impact on the Kiwi. The Kiwi is down now over 1% on the day. Basically, comments from an official from the RBNZ suggested that potential rate cuts were going to be coming through if the prices remained disappointingly low, and it looks like there could be on the move towards another rate cut, or towards a rate cut. So that's put pressure on the Kiwi today, and that is why the Kiwi is strongly lower. In terms of the data that we've got to look out for today, well, we've had all the Eurozone PMI data out. Those Eurozone PMIs actually came out fairly negatively as well, which has helped to add to a bit of the gloom that is surrounding this European session so far. Both Germany, France, and also the Eurozone-wide data missing expectations, and a little bit disappointing there across the board. Into the afternoon, we've got the US jobless claims. That is also always on a Thursday. 290,000 is the expectation there, down from 294 last week, so no real change expected. And then following on from that, we've got the US flash PMI data, which unfortunately I don't really have a chart for. That comes out 2:45 this afternoon. It's expected to just come back slightly to 55.5 from 55.7 last month. The expectation for the new home sales is for a just slight decline back to 514,000, but as you can see here, the new home sales continue to improve, and that would just be just tempering that last month's strong gains, but certainly you would argue that that is an upward trending indicator there. So the new home sales remain strong in the States and expected to remain so today. And that would probably be strong and positive for the dollar as well. Now, my chart of the day is the DAX. And this DAX chart, I wrote the morning report this morning, obviously without knowing how the DAX would open up. And it certainly has been fairly weak at the open. And I'm increasingly becoming worried about this becoming a head and shoulders top pattern. What I'll do here is put in the neckline, potential neckline, if I can draw straight, of that potential head and shoulders top. And it certainly is close to doing it. That's left hand shoulder, head, potential right hand shoulder. And the last 3 days have certainly been put the DAX under pressure. And you'd say that a break below the reaction low at 11,620 would be the confirmation of that break. The initial support 11,675 is the reaction low that we had in on the 17th of April, but certainly 11,620 is the key level that I'm looking out for. Interestingly enough, this is 161.8. I'll zoom out here because I think the Fibonacci projection has worked excellently on this. Fibonacci projection of that October to December rally measured from the December low found resistance around 100%, and now messing around the 161.8%, and that 161.8% around 12,020. Interestingly enough, pretty much capped the gains from a couple of days ago. So the other thing that I'm increasingly worried about is these momentum indicators. Look at how strong the momentum was throughout January, February, March on the DAX. Throughout all that uptrend, RSI was consistently above 60, now dropped sharply below 60 and falling back below 50. MACD lines falling away. Stochastics, similar sort of story to the RSI really, consistently above 60, now sharply down. So that suggests to me that this the upside impetus of this rally that we've seen since December and January has now been lost, and it certainly looks like pressure is being put on this chart, on this DAX now in the near term. And just zooming in, show you this the last few days, and actually on the hourly chart you can see that in a better way. Here's that top pattern last few days, and look at all these hourly moving averages as well, falling away pretty much lower across all the moving averages. Now even the 200-hour moving average, which if I zoom out has been rising since January, has now turned lower and is sort of providing a basis of resistance as well. So really is starting to become a concern, I think, this chart. Momentum indicators, MACD falling over around neutral, having been consistently above neutral throughout this big uptrend. And the RSI also falling over. So a lot of reasons why I'm becoming increasingly worried about this DAX chart, and I think we need to be concerned that further pressure on these key lows could well be seen in the coming days. So the immediate pressure is on that support at 11,675. So far it hasn't tested it yet. Basically 11,700 pretty much on, and then rallied slightly about 30 pips up, but I think the pressure could well continue to the downside in the coming days. Obviously you'd be looking out for the reaction highs in the last couple of days being the resistance. So yesterday you're looking at 11,940 and also 12,079 being the resistance as well. So a few levels there to work with, but it certainly looks like the DAX is increasingly under pressure for a correction. Not completed yet, I might stress as well. Anyway, I wish you good luck in your trading on DAX, and I'll speak to you later. Thank you.